Hey, good morning, everybody. Thanks for joining us today. Hey, as we get ready to start the morning, I do want to remind you to please, if you like what we're doing here, please like our page, Statler Financial Services, and share this video with your friends and family. I really appreciate it. Hey, before we get started with Dave this morning, I just want to remind you again about the free report that we offer on different things. But today we're looking at market corrections. I think the market continues to hit all-time highs. And as it does, I think it becomes more and more important that people understand them. And especially if you're 5 to 10 years out from retirement or you're already retired, market corrections can have a big impact on your retirement. And so it becomes very important. And all you have to do is text the word market to 863-285-3815. Or here on Facebook, you can click the link right above this video. Hey, I look forward to talking with you in just a few minutes.
For fears. My name's Morning Dave. We're at 8:39 here, 21 before 9. We always check in on your money and find out what Sam Hill is going on Wall Street. Well, we do that with the help of Phillip Statler down at Statler Financial Services in downtown Sebring, who is on the phone this morning. Phillip, how are you today?
Hey, good morning, Dave. Hey, doing well today. It's, man, you know what? Today is July 30th. We have one day left in July of 2019. It's hard to believe where we are this year already.
Yeah, can you believe we're well past the halfway mark in the year already? And boy, has it been eventful on the investment markets. Start out the morning with a little bit of news item before we get to the macro junk coming out of the federal government. Case in point, what happens when the world gets news that somebody hacked into your computers? Capital One announced they had a data breach on their credit card files yesterday, and all of a sudden everybody's selling them like chiclets. They're down by more than 4%, even though I think they did well on their quarterly report.
Well, you know, data breaches have become an issue across the board. And it's going to get more and more and become more and more of an issue as more and more stuff becomes online, accessible via the internet and stuff. So, but I get people that always fear that, right? They fear their stuff's online. I tell people, look, your stuff's out there. It doesn't matter whether you're online or not online, your stuff's out there. Just the federal government has gotten busted before. So, you know, your information's out there. We just need to be better protectors of our cybersecurity.
I think you got the right perspective on it. The fact of the matter is you are online, whether or not you like it. The question is whether or not the people that have you online are taking proper care of you. And no matter how hard they try, there's just an innate risk. I mean, Jesse James used to go in with a gun. Now we've got little dweebs with a keyboard, but it's the same concept, isn't it?
It really is, you know, and so all you can do is be proactive and try to do all you can to protect yourselves. And as a company, you have to do the same thing. You have to be proactive and do the things that you can do to protect data. But there are always going to be people out there trying to get to your stuff. I mean, even, you know, IRS's databases, Medicare's database, I mean, all those things are susceptible to being hit by cyber attackers. And so, you know, I hate to say this, but you can't worry about it, right? We have to live our lives and knowing that that is a risk and do all we can to protect ourselves.
I was going to say the bottom line is, you know, don't be stupid, but don't lay awake night and, you know, work yourself into a lather over, I better do everything on paper, because the world has changed too much to be able to do that. I mean, you know, things like open Wi-Fi and the like, it's probably a bad idea to do your online banking on an open Wi-Fi. That's kind of on the basic side. Change your dang passwords on your Gmail account. The obvious things that we do, and by and large, you'll probably be okay, but then again, junk happens.
That's right. And so cybersecurity is just something we're going to have to live with from now on. And so we just have to be proactive and do the best we can to protect ourselves.
Understood. As we open up the morning, we start out with some macro news. The government dumped something on us called PCE inflation. If I remember correctly, that stands for it's a consumer measurement on inflation. I'm not 100% sure what exactly it measures, but it's another consumer inflation number. And it was in line, looks okay, up 1.4% on the 12-month increase. That's, within the range of reason, and nobody got surprised by that. Pretty much reassures us the economy is on line with what it's supposed to be doing.
Yeah, that's true, Dave. I mean, I looked at all the different things that came out this morning, and every single metric was in line with what everybody expected. And because we had personal income come out today, it was up 0.4%. That was as expected. We had
good news, but expected, yeah.
Absolutely good news. We had personal spending up 0.3% as expected, which is good. People are still spending money. It hasn't gone backwards.
Annualized, that's 3.6%, which isn't half bad. We can do with that level of consumer spending growth.
But yeah, and so as we continue to look at where we are, I mean, it's nice to come in as expected. It's that's much better than being disappointed.
Yeah, because then it lets us actually trade based upon the companies that are reporting. Before we get to the reports, though, do you think these numbers out of the inflation numbers are going to encourage or discourage a change in the Federal Reserve? Because they start meeting today. We get the report tomorrow, and that's going to be the market mover for the week without a doubt.
It really is, Dave. And I don't know. I mean, I've read a couple articles that said there's two trains of thought that sit on the board. And so it's going to be which one can win the others over to when it comes time to vote on whether or not we're going to decrease interest rates or not. And so that's a good question, and I think it's still up in the air. I mean, I think if we don't get a rate decrease, that may play havoc on the markets tomorrow.
I expect so. I don't think I can remember a Federal Reserve meeting that we've gone into with the wider range of expectations. I mean, we've got everything from people saying they're going to drop it a full 0.5% to people saying the macro numbers that have come out over the last week or so mean they may not drop it at all. I mean, we've pretty much gone across the board in terms of reaction. And I have no idea whatsoever what the market's reaction is going to be if the probable 0.25% drop happens.
Yeah, I don't either. I mean, I would think that would kind of just be the status quo. If that's what you've expected, why would it really fluctuate the markets at all? I mean, the Bank of Japan, they came out and they left their interest rates the same. And their forward guide, one of the things I saw a little article I read was that they were hoping that the forward guidance would indicate a lowering of interest rates. But it didn't. I read another article that said, hey, look, Guggenheim came out and said that actually the United States interest rates could go negative. Now, I didn't see the time frame of what he was talking about, but he's talking about that our interest rates could go negative. I mean, that would be a big change from where we are today.
And my instinct is he didn't get the memo that Janet Yellen is out of office. Setting the table before the reports, we were up generally on the Dow yesterday, off a little on the NASDAQ and the Standard & Poor's, which kind of reflects the fact that we have different stocks reporting and different fortunes. One change can really affect the Dow more than it can the other two indexes. In terms of reports this morning, before we run out of time, I know you got a passel of them, Phillip.
We really do. So let's start with kind of the pharmaceuticals. We got Merck and Eli Lilly. Both of them, came out ahead in both earnings and revenue. Merck was helped by their Keytruda drug, helped really increase their numbers. They're trading up about 3% this morning. Eli Lilly, if I get the right button here, is up a little less than 1% this morning. And so they're doing well on that side. Procter & Gamble, kind of what I call the old, brick and mortar. They seem like they've been around forever, right?
Can't live without soap, right?
That's right. It's one of those things. It's a staple in our households. They beat by 5 cents a share. Revenue was above what was expected. They've been able to increase their pricing on their beauty products, which is helping them. They're up a little over 4.2% this morning.
They're toward the top of my big winner list this morning, I can tell.
Are they? Good. So let's talk about a couple losers out there. Now, Under Armour came in. Now, they didn't lose. They actually, well, they did. They lost money. They lost 4 cents a share. But that was a little better than expected. Revenue was in line, but they're getting beat up this morning because they have cut their full year North American revenue number. Yep. Nike's giving them a real run for their money and giving them a lot of competition right now. And so they're, I guess, having to cut cost. They're down. They should be one of your big losers today. They're down 11%.
Oh, they're on the top. They got two classes of stock out, and they're both down 11.5% this morning. Number one and number two on my big loser list this morning. So they're having a rough time.
So the other one that's taken a big beating today, and they're a relatively new IPO company, and that's Beyond Meat. Beyond Meat's the one that makes the meat substitute stuff. Yeah, they lost 24 cents a share. They were expected to lose money, but only 8 cents a share. The revenue was better than expected, though, and I think they're getting hurt probably too because they have put out another stock offering. So to try to raise, I think $1 billion or something. So they're down 15.5% this morning.
Not a good time for another equity offering right after you get beat up on the market.
Yeah, not good at all.
Bad timing.
Yeah, we had D.R. Horton come out. Horton came out and they beat both on revenue and earnings per share. They've seen lower mortgage rates that help them substantially. They've been able to raise the prices of the houses a little bit, and so they're up about 1.7% this morning.
That's a good sign in the housing industry. When you and I were talking on the phone, I thought it was the donut shop. Then I realized it was Tim Hortons that does donuts.
Exactly. Yeah. Right. Donuts and houses, they're kind of different.
Mm-hmm. Yeah, there's a little bit of a difference in the price tag. I agree. So looking at the reset the table, it was one of those days in which the market was affected by the stocks traded. That means the Dow was up because it's price weighted. NASDAQ and the Standard & Poor's were off a bit yesterday. 45 minutes before we opened this morning, Phillip. How are we doing in terms of the ink color of the day?
Well, we're going to get a little red ink on the three major indexes this morning. We've got the Dow down $96, the S&P 500 down 14, and the NASDAQ down 56 right now. We've got gold and silver both trading up. Gold's up 0.5%, silver's up 1/3%. And crude oil is moving back up, Dave. It's up 0.75% to $57.25 a barrel.
Well, that's where the green ink doesn't want to happen.
Exactly.
Overseas markets, Asia closed up this morning. Europe generally off this morning. They must have heard that Boris Johnson got a haircut or something, as England is off the most. Phillip, somebody need retirement information, need to be able to stabilize things in the face of a truly strange market situation. How do I find you on the phone?
David, give us a call at 382-0037 to schedule their free financial x-ray analysis of the current portfolio to make sure that they're not got too much risk given where the market is right now. And then we still have our free report on understanding market corrections. All they have to do is text the word market to 863-285-3815. Or if they come back and look at this on Facebook, there's a link. They just click the link. It'll take them right there. And then join us every weekend for the Statler Financial Radio Show. Our new time, we've added a time, right? 6 a.m. Saturday morning for you early birds, noon on Saturday, and then 10 a.m. Sunday morning. So tune in there on News Talk 7:30 a.m.
Wake up with Phillip 3 times every single weekend on News Talk 7:30 a.m. and newstalk730am.com online. Phillip, thank you so much. We'll catch you tomorrow. Fair enough?
All right. Thanks, Dave. Appreciate it.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. I do want to plug again our weekend radio show 3 times on the weekend, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 7:30 a.m. You can also go to newstalk730.com and you can actually stream it live right there. So, hey, and then don't forget, we still have our free report. I want to mention it one more time out there before we go. All you have to do is text the word market to 863-285-3815 or here on Facebook, click the link right above this post. Have a great day. I look forward to speaking to you again tomorrow.